Welcome to this virtual fireside chat. There's no fires. There's actually not even two people next to a fire, but we're going to try to talk about some interesting topics here for you. I am Paul Vigna. I'm a reporter at the Wall Street Journal. I've been covering Bitcoin and digital currencies since about 2013. I am joined today by Chris Larsen, who is the co-founder and executive chairman of one of those cryptocurrencies, Ripple. Chris, how are you?
I'm doing great. Thanks for being here today. It's too bad we're not here in person, but nice to be here virtually with you.
Right, exactly. So let's just jump right in. We're going to talk about digital currencies, digital money, something that I think is, it's interesting to me, Chris, is that I think we're coming up right now. It's about a year since Facebook unveiled its proposed digital currency, Libra. And even though it hasn't launched yet, I think the fact that you had a company as big as Facebook jump into this space really changed a lot of people's perceptions, certainly in government and policymakers. And in the last year, I think you've probably seen this idea of digital money get more respect, and you would know this better than I would even. You've probably seen this idea get more respect than it had in the previous 10 some odd years since the launch of Bitcoin.
Yeah, yeah. No, I think you're exactly right. That was a major milestone. I think with someone like Facebook coming on board into the space with really these global ideas. Now, obviously, it ran into quite a bit of headwinds, but I think it was a marker. And we're kind of it is a little bit of a new ball game, and I think a little bit of the response to that, frankly, was what you're seeing in China, with China now coming out with a central bank digital currency. And I know we can talk more about that if you like, but that's pretty major. So this is clearly global. I think sort of the early kind of feeling that, hey, this is going to change the world. Maybe some of the early propaganda that you heard from the true believers might not have come true. But I think, like many technologies, it takes many different attempts. It does take years, and it's particularly in a regulated industry like financial services. But I think all the promise is there, and you are seeing these real world implications that today are actually changing the experience of billions of people. And I think much more to come. I think we're just at the beginning innings, but that was definitely a milestone that's propelled it into kind of a whole new opportunity, a new direction.
So you talked about uh, billions of people's habits being changed. But from your perspective, actually, you know what? Do a little bit of just tell us what your perspective is, how you got into this
Yeah.
before we talk about some of those things you said you're seeing, because I think that'll be interesting. Well, what was this space like when you first got involved in it? Why did you want to get involved in it? What led you to this?
Well, I'd had two fintech companies before we started Ripple, eLoan and Prosper, and they were also during some boom times and crash times, and all typical technology, right? But one of the striking things about fintech before blockchain was it was always country by country, and that was kind of disappointing, right? I mean, the whole internet, the whole idea there is you're going to break down borders. Anybody anywhere can communicate, and that did happen. And fintech never quite got there. And the reason was, even though we had internet infrastructure, we didn't have sort of this notion of an internet for money, because value and information are just fundamentally different things. And the world needs an internet for money that's different than the internet of information. So I think the real thing that we saw was, the frustration we saw in moving eLoan from outside the US. You had to have a separate Japanese company that was not interoperable with the US one, separate one in Europe. The real promise here was, oh my God, this is an internet of value. We in early days, you didn't know where that was going to go. And there was just, again, a lot of crazy talk. Clearly, they were going to blow up all the banks and, everybody's just going to hold money individually. That did not happen, obviously. And it's a good thing it didn't. But I think that everybody kind of gravitated to, okay, this is it. This is that final step in what the internet always said it was going to do, but for money. And now you layer those things on, and we always talk about, if you have an internet of information, if you have an internet of value, and you have kind of the ability to ship goods anywhere, well, we have that with shipping containers and global shipping. We have that with the internet. Once you complete the picture with an internet of value using blockchain and blockchain-like technologies and virtual currencies, that's globalization completed. And that is incredibly exciting. I would argue globalization is having all these problems because it's incomplete. It's a work in progress because we're missing this key ingredient. So that was the exciting part, and it remains the exciting part. And we're now seeing it. Ripple now, we have 300 financial institutions. We're an enterprise company. We think enterprise is the way you're going to spread this the fastest. 300 financial institutions globally, covering 45 countries that can reach 1 billion people. That's today. 24 of those institutions now are using the virtual currency as well as the blockchain plumbing. And that's fairly new in the last couple of years. So virtual currencies are today being used to lower the costs and give greater access to hundreds of millions of people, certainly. And before too long, it's going to be billions and billions of people. And that's the true promise. That's really exciting.
Do you think, I want to talk about this a little bit, because one of the things I have to say, one of the things that got me interested in this in the first place was this whole idea of rebuilding the financial system. Trying to come up with something more egalitarian, something that was more accessible to people. Do you, and I have to be honest, I think one of my disappointments, and I don't know if this is just a perception thing, honestly, one of my disappointments is that I don't think it's gone as far as I expected it would. And to be honest, I don't even know if it's fair to say what I expected in 2013. But what do you think is the state of digital money right now in the, we're more than 10 years since Bitcoin was introduced. Do you think it's lived up to its potential? Do you think it's fallen short a little bit? Has it just been harder to create a new kind of money than anybody anticipated?
Yeah, I mean, those are great points, right? And I agree with you. The global financial system we have today is antiquated, right? It's SWIFT correspondent banking. That's how you move value cross-border. That's built in the 70s. Its days are numbered. It has to be replaced. So that was one of the things when Bitcoin came along was, okay, is that the thing? And again, is that the internet of value? And I think a couple of things, Bitcoin has its own idiosyncrasies that make that sort of difficult. One was, I think, the early boosters of it were true libertarians who believed you could go around the existing financial infrastructure. I think that was a mistake because it's the incumbents already have billions of people. It's too expensive. There's lack of access. There's too many errors. It's too slow. Yet, a lot of what they built works really fine. They just got to fix a couple of things. So it would have been better if Bitcoin early people, I think, would have worked within the system. Bitcoin also has some other issues. It's a probabilistic settlement, right? Because miners can undo things theoretically, and it uses a lot of energy. But so I think also you're right. It's disappointing that Bitcoin kind of went into, hey, we're about store. Remember all that payment stuff we talked about? Well, we're about store value, right? Yeah, and that's kind of largely wealthy people, right? I mean, it's kind of cool and it's kind of digital gold, and I think that's a great use case for it. But it isn't the promise of billions of people coming online. You've got to work within the system to change the system. That's sort of the path that we've taken. And you also, by the way, they have to have a very efficient, not all of these digital assets are the same. Bitcoin uses a lot of energy that's costly. Someone's got to pay for that. It also is prone to be controlled, and frankly, it's controlled by miners in China. You have to say that it has undue influence by Chinese miners and therefore the government. We think things like XRP are going to be more neutral. They're going to be faster, cheaper, just because of the way it works. And that's what we've embraced, obviously. But you are really seeing some fascinating things. Ethereum protocol is seeing really interesting things. Decentralized finance. Who knows where that goes? But it's really interesting. Web monetization, that's taking off. That's the true idea of the internet. How do I exchange bits of information for bits of value? So I do see the promise stronger than ever. But you're right. Some of the early, hey, this is going to change everything in 2 years. No, that didn't happen. Things take time.
Yeah. So what has to happen from, we're in June 2020. What has to happen over the next 2 years, 5 years, 10 years, whatever? I mean, what changes do you see taking place? Is it just going to be a natural evolution? Is there something, are you going to need an entity like the Federal Reserve stepping in? And we can talk about the Fed a little later, but what do you think is going to happen over the next several years, and or more than what you think, what do you think needs to happen?
Well, I think we need to work within the system, clearly. We do need to work with governments. Again, a big mistake early on was, we're just going to go around central banks. I mean, just nonsense, right? So we've got to get the central banks involved. Frankly, they are, though. I mean, there's an incredible amount of engagement going on, whether it's the in the UK or in Japan, Singapore, the Fed here in the US, certainly Brazil. I mean, all around the world. India now is loosening up. You see major changes there. So it is happening, but those things take time, right? And technology works on kind of one quick cycle that's very different from how governments and regulation work. So they're kind of a natural mismatch, but we've got to get those three things: tech, capital markets, and regulatory authorities working together. That's difficult, harder than the internet, in fact. So I think a lot of it is staying with it, working within the incumbents, but not keeping our eyes off the prize of access to all. One of the cool things that's happening with these new networks that involve blockchain, it's allowing digital wallets for the first time to really get on board. And they have a really hard time getting involved with SWIFT and correspondent banking, which blocks, you look at something like Bcash in Bangladesh, 35 million users, growing incredibly fast. These are individuals that don't have bank accounts. So those wallets are the bank accounts, right? And I think in the US, we need to look at it a similar way. Millions and millions of people. There's a hearing just on the June 11th about this, who don't have access to bank accounts. Could a central bank digital dollar help that? I think it's possible it could. Obviously, China now has moved very strongly into building out a central bank digital currency, a renminbi, as well as controlling mining and basically having almost all their payments digital. Domestically, frankly, and we can talk about it as well, we're way behind China when it comes to blockchain technology. So, the companies need to just stay at it, blocking and tackling, working within the system, but that vision of free money moving around essentially for free. That's what the internet basically is for information. But the U.S. government also needs to get a lot more involved in blockchain. We're slow to the game. China is so far ahead of us. They just announced they're going to spend a $1.4 trillion on technology. Payments and blockchain, clearly part of that strategy. You could even argue the move to control Hong Kong more closely gives them an advantage in controlling two of the global financial centers. U.S. only has one, right? So the U.S. it's got to change its view that goes from 17 and 18, which was all about these horrible ICOs, initial coin offerings, which were terrible, had to be shut down. They effectively shut them down. We won that war. Now we got to switch to, okay, how do we compete with China? How do we keep up? And, till now, frankly, US regulators have actually helped China by officially giving clarity to the two protocols effectively controlled by Chinese miners, Bitcoin and Ethereum. That's a mistake. We've got to also give clarity at least, and maybe even support, if this really becomes a tech cold war like it's looking like it will be, to technologies that are more favorable to U.S. and its allies' stewardship of the next-gen global financial system. Otherwise, we face a potential catastrophe. I don't know what the odds are, but there's some meaningful, probability if China was to get control over the next-gen financial system. I mean, that could really be devastating to American power and its allies' ability to make payments to defense payments to an ally, American banks that might be blocked or throttled back on how fast their payments go. You could even see some terrible situation where a U.S. company that has a low Chinese social credit score could be blocked from that new infrastructure. Those are bad outcomes. Even if there's a small percentage chance that happens, we've got to check that to make sure that we're involved and we're competitive as a country.
Yeah, again, it's interesting. You talk about what's happened over the last year since Facebook announced Libra, and you just kind of highlighted a bunch of them, right? China ramped up its development of its digital renminbi, and that is going to now be part of their policy arsenal. The U.S. government is, it's interesting. Right after Facebook launched Libra, there were some congressional hearings, And a lot of them were basically along the lines of, what is this and why is Facebook doing it? The hearing last week was really interesting. It was the House Financial, I wrote it down because I was going to forget it. Uh, it was the House Financial Services Committee.
I think that's right.
I
Yeah.
think that's right. If I'm wrong, everybody give me a break. I'm trying to do it off the top of my head. But the hearing last week it was two-pronged, and it was basically, can we use this technology to help get out some of these benefit checks from the pandemic relief bills? But it quickly kind of morphed into, well, maybe we should just be talking about a digital dollar. And look, I don't think we're close to having a digital dollar, but the fact that it's being talked about very seriously in Washington, I think shows how fast at least minds are changing. They may not be near doing it, certainly not as close as the Chinese. So I think you do have that sort of shift in mentality among governments, among lawmakers, not just in China and the US, but everywhere.
Yeah.
But what I think is interesting, let's talk about this a little bit now, is so China's, they are much further along in getting a digital yuan launched and running and out there and everything. I think you have, up until recently, and Bitcoin kind of made this part, forced this issue. I don't think a lot of people really thought about what money was and how money was used. And I think now you have to start thinking about that. And you have to start thinking about, well, if the Chinese have a digital dollar and they are now going to be using that to help export the yuan, what are they really exporting? What is this system? This is when we talk about a Cold War of technology between the US and China. I mean, this isn't just a technological war, it's a values war.
Yeah. Yeah. Yeah, you're exactly right. I mean, the U.S. has had, and its allies have had this incredible privilege of basically having, the main stewardship, I don't know if you will, control, but power. I mean, incredible advantage by not just the U.S. dollar, but effectively sort of stewardship over the global payment system, global financial system. Huge, huge advantage. But that's benefited other people too, including China.
Right.
It's interesting. I mean, China could have made a decision at the dawn of the internet to say, nope, we're not going to be part of that. We're going to have our own internet. We'll have two of them. World would have split apart. That didn't happen because they saw it was in their interests, because of globalization benefited China to be part of the main system, even if the stewardship of it, was a great deal in the U.S. and its allies, the West. That's the same thing we face today. I would argue that it's not just important for the U.S. to maintain sort of stewardship of the next gen financial system. I'd actually argue it's better for everybody, including China. And I think if we play our cards right, like I know we're in this tech Cold War now, but that's going to pass 5-10 years, about who knows how long. But I think we can get to a place where China would be comfortable, and then the world is kind of organized in a single system again. And I bet that does involve blockchain technology, interoperability protocols, central bank digital currencies from all the major areas, with probably a virtual currency acting as the bridge, right? Because it's neutral, and it doesn't carry, to your point, it doesn't carry not only the capital controls and the various rules of, let's say, U.S. Treasury, for example, but also doesn't carry, and this is much less the case in the U.S., right? Because it's a liberal economy, right? It's exporting. Hey, everybody's free to do what they want to do economically. It doesn't carry a lot of weight to other countries where a virtual currency doesn't have any of that, right? Because there's no counterparty at all. So virtual currencies will be really key in that kind of a world. But again, imagine if really bad if China says, "Hey, well, you're going to have your system, we'll have ours." Bad for everybody. World gets smaller, gets more dangerous. And really bad if China controls the infrastructure, because basically the Great Wall would be built into infrastructure. On the internet, right. It's an application under global infrastructure. That would not be so good for the rest of the world, particularly US, if that was built into the infrastructure. And I think, look, it's in China's interest. They're doing what they need to do for their objectives. But I would bet a social credit score of some sort would be built into that global financial center. That'd be a really changed world.
Yeah.
And we got to guard against that, I think. And that's good for China too, by the way, long term.
Yeah. I, it's funny because I could not imagine ever in my lifetime using me, sitting here in my house in America, using a digital yuan. I don't I don't see that as the real threat when we talk about China in the digital yuan and them exporting it and having whatever leverage over an international monetary system. I do see them having a lot of leverage in Asia, right? I mean, they can coerce all their trading partners to start using this, all their neighboring countries to start using it, and that is, it's not a small area of the world. I mean, that is a huge part of the world. And through this yuan, they export Chinese values. You get people on your financial system, you get people under, nominally under your control, you exporting your own values. And I, I just, it was last summer, right, where there was this blow up. The Houston Rockets GM talked that said something about supporting the Hong Kong protesters, and the Chinese were mad about it. And the Chinese, I mean, think about this, like the Chinese were able to get a US executive in the United States to backtrack on something he had said. That's the power that the Chinese have. That's what I'm talking about. I'm talking about like exporting values and using the currency to export your own values. That's, to me, is a real concern.
Yeah, no, I think you're exactly right, and that is in fact what's going on right now. There's kind of a race in this next gen financial system and other things too, other technologies. Obviously, tons of things going on today. But just thinking with payments and blockchain, the Belt and Road initiative. Part of that, to your point, is bringing on countries throughout Southeast Asia, and beyond, in Africa, certainly, perhaps
Right.
Latin America. So you could see this outcome where there's sort of the U.S., Japan, India, the Middle East, anchored by Saudi Arabia and the UAE, and Europe, clearly UK, that sort of have one system, and then sort of China through Belt and Road and extension of that, and the developing nations having another one. Again, that's not a good outcome for the whole world, right? And that's a very polarized world. So I think by the US keeping up and making sure it does have a central bank digital currency and experiment with it and see where it goes and kind of keep up on this sort of arms race of technology, that's a bet you have to make, right? Among other things. And also, how did we win the internet? We had some great companies, and the US came up with a very clear, simple, minimalist regulatory approach, and that's why we have these incredible companies pretty much dominating, the internet as we know it today. That's incredibly powerful. We got to make sure we do that with next gen financial systems. We haven't really done that yet, and we got to start catching up.
Yeah. What would you tell, what would you tell policymakers that they need to do? I mean, how close are we realistically to digitizing the dollar? And then I have some questions about that. I don't know how much. I know we only have a couple of minutes, but not only what would you tell them, but what are some of like the real hurdles that have to be overcome? Logistical hurdles. I mean, it's one thing to say, yeah, we should digitize the dollar. That's great. Let's do it. It's a lot harder in practice to actually get everybody on it. How would you, what do you see as some of the challenges there?
Yeah, well, the biggest thing right now is the US has to give regulatory clarity to the industry, and particularly the industry in the US. You're seeing a situation now where sort of payments, blockchain startups are fleeing the US, or they're simply not even getting started here because of this problem. VCs aren't going to back you unless you got regulatory clarity. We've got to get that regulatory clarity. And then we've got to embrace our great US companies, just like we did with the internet, and at least help them compete, right? That's all we're asking for. And we don't quite have that yet. And the digital dollar, I think it's pretty easy, you're right, technically to do it. The question is policy-wise, and then what?
Right.
Is it just to banks, or is it just to wallets, or is it to everybody? You can do a lot of things there.
Right.
It'll be interesting to see how far we go there.
Yeah. I think we are out of time. I keep getting message that we have 1 minute, 2 minutes. Now I think we're under 1 minute. So I think we're done. Chris, thank you. Thank you very much. This is a good talk.
Thank you so much, Paul. That was
Yeah.
great.
Yeah.
Appreciate
Hopefully
it.
I'll see you soon in person.
I hope so.
All right. Thanks.